at this point, the sentiment around Amazon's AI playbook is much more positive right now. There had been this feeling on Wall Street and in Silicon Valley that when it came to the AI race we talk so much about, Amazon was caught flat-footed, which really stemmed from its lack of a dominant chatbot. So Alexa, for example, has yet to catch up in generative AI. And then the choice to invest in startup Anthropic rather than developing its own frontier model. So the negativity has really shifted, at least from what I'm hearing. Amazon is getting a lot more credit for being what one investor described to me as the Switzerland of AI, especially, as you mentioned, Andrew, after DeepSeek highlighted the power of free open source models and then some of the falling cost in the industry. Consensus now is these models are becoming commoditized or really starting to look the same. So Amazon executives have been pretty diplomatic about this, saying cloud customers want choice. AWS has offered access to models from Meta, Anthropic, Cohere, and now DeepSeek, as well as its own Titan version. AWS CEO Matt Garman told me back in the fall when I asked him about the criticism of their AI strategy, he said, "We are willing to be misunderstood for long periods of time." So he was quoting their founder there, Jeff Bezos. Amazon has invested about $8 billion into Anthropic, which does have a large language model. That's one of the leaders. The startup uses AWS as its primary cloud provider and then trains on its custom chips. And meanwhile, Amazon is still spending big to capture what Andy Jassy, the CEO, calls a once-in-a-lifetime opportunity. Jassy saying Thursday during the earnings call, AI is a multi-billion-dollar run rate business within AWS. They're upping CapEx by roughly 26% to north of $100 billion this year, mostly for AI guys.